Hey everyone, welcome back to Investing Talk podcast. I'm really glad you're all here today to talk about a company that's been making some noise in the market.
Snap. Yeah. Ticker symbol SNAP.
So we're going to take a deep dive into Snap today, because a lot's been happening and they've been putting up some impressive numbers lately.
Definitely their recent performance has been really catching the eye of a lot of investors and
No,
analysts.
yeah, like their Q3 2024 revenue just blew past expectations, hitting $1.37 billion. That's a 15% jump from the same period last year. But it's even more impressive.
It's got to be that quarter-over-quarter growth, right?
Yeah, exactly. A 10% increase from the previous quarter, which suggests that they're not just growing, but they're actually accelerating.
That's a really positive sign, especially when you see consistent upward trends like this. It indicates something more substantial than just a one-off good quarter.
And it's not just the overall revenue that's looking good. Their advertising revenue is also climbing significantly, particularly in direct response advertising, or DR as it's known in the industry.
Yeah, DR advertising was up 16% year over year, which tells us that advertisers are seeing real results in the platform and they're willing to spend more.
So with all this growth and happy advertisers, is SNAP a buy right now?
Well, a lot of analysts seem to think so. They're projecting that Snap's revenue could hit $6.21 billion in 2025, up from $5.38 billion in 2024.
That's some serious growth potential, especially when you consider that Wall Street's overall expectation for earnings growth in 2025 is a more modest 10%.
Right, and the overall positive economic outlook we're seeing could also work in Snap's favor, providing a nice tailwind for their continued growth.
There's also that whole thing about the potential TikTok ban in the U.S., which is still up in the air. But if that were to happen,
That could be huge for Snapchat. It could lead to a massive influx of users who are looking for an alternative platform, and that could also boost their subscription services like Snapchat Plus.
that potential user surge is definitely something to factor in. So right now, Snap stock is trading around $11.84 a share with a projected target of $13.78.
That's an upside of over 10%, which is pretty enticing for a lot of investors.
But it's not just about the numbers.
Mm.
Snap is strategically positioned in a really interesting part of the social media landscape.
Yeah, they're definitely facing stiff competition from those giants like Meta with Facebook and Instagram, and of course Google with YouTube.
But Snap seems to be laser focused on augmented reality, or AR, and that gives them a unique edge.
AR has the potential to be a real game changer in the world of social media, and Snap is right there at the forefront.
And they're not just relying on AR for growth. They're also rolling out these new advertising formats like sponsored snaps and promoted places, which are projected to bring in an additional $180 million in revenue.
Those are smart moves because it shows that they're diversifying their revenue streams and creating new opportunities for growth instead of just relying on one main source.
So it sounds like Snap's hitting all the right notes right now with strong financial performance, cutting-edge technology, and the potential for some serious market disruption in their favor.
Yeah, they are definitely showing a lot of promise, but of course we need to dig a little deeper to get a more complete picture. The market's always dynamic, and there are definitely some external factors and potential risks to consider.
Absolutely. And speaking of which, we should probably mention that Snap's Q4 and full year 2024 earnings report is coming out on February 4th, 2025. So mark your calendars, folks.
Yeah, that report will be crucial for really understanding where Snap stands financially, and it'll also give us some more insight into their operational strategies.
It could definitely have a major impact on their stock price. So let's move beyond the hype for a minute and take a look at the technical side of things. On January 15th, 2025, SNAP had kind of a roller coaster of a day, trading between $11.63 and $12.35 before closing at $11.84, up 4.41% for the day.
It was a volatile day, but what really stood out to me was the volume. Over 34 million shares traded, which is significantly higher than their average volume.
That high volume does seem to suggest a lot of investor interest in SNAP, like there's some serious action happening there.
Yeah, it points to some potential accumulation of the stock. And it's worth noting that the 5-day, 20-day, and 50-day moving averages are all currently giving us buy signals.
But I think I read somewhere that the 200-day moving average is actually signaling a sell, so it's kind of a mixed bag there.
Yeah, that longer-term 200-day moving average does suggest that the stock might be slightly overextended in the short term, but it's important to look at the bigger picture.
Right, it's not always about jumping on every little signal.
Exactly. The RSI, which measures momentum, is currently at 59.13, which is getting close to overbought territory.
So that doesn't necessarily mean a crash is coming, but it does hint that a short-term correction is possible.
Exactly. Even with a strong upward trend, you can still expect some fluctuations along the way. It's just the nature of the market.
Speaking of expectations, it seems like analyst sentiment is pretty positive on Snap right now.
Oh, yeah, definitely. Cantor Fitzgerald, for example, recently upgraded their price target for Snap from $9 to $12. That's a pretty big jump.
And on top of that, Snap just announced a major partnership with a leading digital publisher.
That's great news because it should expand their advertising reach even further and open up new revenue streams for them.
It looks like they're really playing their cards, right?
Yeah.
So to sum it all up, Snap is demonstrating some pretty impressive revenue growth. They're embracing cutting-edge technology, and they seem to be taking a really strategic approach to their market positioning.
They're definitely a company to watch, but as always, we encourage all of our listeners to do their own research and due diligence before making any investment decisions.
Absolutely. Don't just take our word for it. Dig into the data, look at their financials, and make sure you understand the risks involved before you jump in.
We've given you a good starting point, but informed decisions always come from thorough research.
So that's it for part one of our deep dive into Snap. We'll be back soon with part two, where we'll take a closer look at some of the potential risks and challenges that Snap faces. So stay tuned.
Yeah, and it's always important to remember that in the world of investing, past performance doesn't guarantee future results.
Right. It's all about, really understanding the company, the market, and of course your own risk tolerance before you make any decisions.
Absolutely. Investing is all about informed decision making. So speaking of risks, let's shift gears a little bit and take a look at some of the potential challenges that Snap might face moving forward.
Yeah, even with all this positive momentum, no investment is completely without risk.
Exactly. One of the biggest things that stands out to me is the competitive landscape of social media. It's fierce out there.
Yeah, I mean, they're up against some real heavy hitters.
Like Meta with Facebook and Instagram, not to mention Google and YouTube. Those are some massive players.
So how can Snap really differentiate itself in such a crowded space? What makes them stand out?
That's the million-dollar question. I think their focus on augmented reality or AR is crucial. They need to keep innovating and creating those unique experiences that users can't find anywhere else.
Yeah, it's not enough to just attract new users. They've got to keep them engaged and coming back for more.
It's like building a really cool app, but if nobody's using it, then what's the point?
And on top of that, they need to keep those advertisers happy and prove that their platform is a valuable place to spend their marketing dollars.
For sure, they've made some good progress with those new ad formats we talked about, but they can't afford to rest on their laurels.
They've got to stay ahead of the curve. So are there any other external factors we should be thinking about that could potentially impact Snap's success?
Regulatory risks are always something to keep in mind, especially for tech companies. Governments all over the world are taking a closer look at things like data privacy, content moderation, and, the overall impact of social media.
It seems like every other day there's a new headline about some tech company facing scrutiny from regulators.
Yeah, any new regulations or legal challenges could definitely have an impact on Snap's operations and their bottom line.
So it's a bit of a tightrope walk for them trying to navigate all those legal and ethical considerations while still innovating and growing their business.
And of course, we can't forget about the broader economic picture. Things like a recession, high inflation, or even just shifts in consumer spending could all affect advertising budgets.
And that would directly impact Snap's revenue.
Exactly. Even a company with amazing products and a solid strategy can still be vulnerable to factors that are completely outside of their control.
So we've got competition regulation and the overall economy to consider. That's a lot of variables.
It is, and there's one more factor that I think is often overlooked, but it's incredibly important, especially for a company like Snap user behavior.
Yeah, those trends can change so quickly. What's hot today might be old news tomorrow.
Exactly. And with a younger demographic like Snap's target audience, those tastes can shift like the wind. They're constantly bombarded with new apps and platforms.
So Snap has to stay ahead of the curve, anticipate what's next, and be really good at adapting to those evolving user preferences.
Yeah, they can't just rely on their current success. They've got to be thinking 5 steps ahead all the time.
So it's not just about having a great product right now. It's about staying relevant and fresh and exciting.
Exactly. They've got to maintain that cool factor if they want to keep attracting and retaining users, especially in such a dynamic and fickle market.
It sounds like Snap's got a lot to juggle with all these potential challenges. Is it still a company worth considering for investment?
Despite all those risks, I still believe that Snap's potential outweighs the concerns.
Oh, really?
Yeah, their focus on AR, Their innovative approach to advertising and, their willingness to adapt. Those are all really strong indicators of a company that's built for the future.
What about that recent partnership they announced with that digital publisher?
Oh, yeah, absolutely. That's another great sign. It shows that they understand the importance of collaboration and leveraging their strengths in a broader ecosystem.
So for investors who are intrigued by Snap, what are some of the key things they should be watching for?
Well, I would say first and foremost, keep an eye on those earnings reports. They're like a health checkup for the company. You can see how they're doing financially and whether their strategies are actually working.
Those earnings calls can be pretty insightful.
Yeah, pay attention to user growth engagement metrics and any updates on those AR initiatives we talked about.
Like, are they actually making progress on that front?
Exactly. And beyond the earnings reports, stay on top of the news and analyst reports. Those can give you valuable insights into any new partnerships, product launches, or, any regulatory developments that could impact their business.
It's all about staying informed.
And of course, always do your own thorough research. Don't just rely on headlines or market hype.
It's about being proactive and really understanding what you're investing in.
Absolutely. Investing is not a passive activity. It's a journey, and it requires ongoing learning, analysis, and a willingness to adapt as the market changes.
Sounds like Snap is a company that demands attention, both for its potential and its challenges.
I think that's a great way to put it. It's a really fascinating company to watch, and I'm definitely going to be keeping a close eye on their progress.
It sounds like Snap could really pay off for investors who are willing to take on a little more risk.
Yeah, it's like with any high growth stock, right?
Right.
There's exciting potential, but it's not for the faint of heart.
So for those investors who are thinking about adding SNAP to their portfolio, what are some of the key things they should be looking for?
Well, I would say first and foremost, keep a close eye on user growth. Are they continuing to attract new users, especially in those key demographics?
Right, because it's not just about the numbers. It's about attracting the right users.
Exactly. And just as important, are they keeping those users engaged? Look at metrics like daily active users and time spent on the platform.
Those are good indicators of how sticky the platform is and whether it's really resonating with users.
Yeah, those are really important signs of a healthy ecosystem. And beyond user growth, you also want to pay attention to their financials. Are they moving toward a sustainable business model?
So beyond revenue, what specific financial metrics should investors be looking at?
We'll definitely look for signs of profitability. Are they actually making money? And pay attention to their margins, both gross and operating.
Margins give you a good sense of how efficient a company is.
Exactly. You can see how well they're managing their costs and whether they're able to scale as they grow. And of course, cash flow is always important.
Cash flow is the lifeblood of any business.
Especially for a company like Snap that's investing so heavily in new technologies and expanding into new markets.
Strong cash flow gives them the flexibility to keep innovating without constantly having to go back to the well for more funding.
Exactly. And speaking of innovation, their AR initiatives are definitely something to watch closely.
That seems to be where a lot of their potential lies.
Yeah, so you want to see how they're developing and monetizing that technology. Are they attracting developers to build cool new AR experiences? Are they finding creative ways to integrate AR into their advertising offerings?
It's one thing to have cool technology. It's another thing to actually turn it into a successful business.
Right, so you want to see that they have a solid plan for making AR a core part of their revenue strategy. And last but not least, don't underestimate the importance of the management team.
The people at the top can really make or break a company.
Absolutely. So look for a management team that has a clear vision for the future and the experience and talent to execute on that vision.
It's all about having the right people at the helm to steer the ship.
Couldn't have said it better myself.
Well, I think we've covered a lot of ground today. We've taken a deep dive into Snap's impressive growth, explored the factors that are driving their success, and analyzed the potential risks and challenges they face.
It's been a really great discussion. Snap is definitely a company that's worth keeping an eye on.
And as always, we encourage all of our listeners to do their own research before making any investment decisions.
We've given you some things to think about, but ultimately the decision to invest or not is a personal one.